numbers came out yesterday. I mean, it didn't react so much yesterday. I mean, it did come out in the last 10 to half an hour.
Yeah.
But today you're seeing the big move.
Well, that's right. You know, the global cues as well are positive. If you look at optimism with regard to Fed rate cuts, as well as there is some optimism that China is going to pepper the economy out there. So both those two are working in favor. So the global backdrop actually is positive. The results were mixed. Yesterday on this show itself, we had told you that Hindalco's numbers actually look good, the India business, while Novelis was weak. So on that front, it's actually a little bit of a mixed set that we saw in terms of their numbers. Let's take you through the India piece, which was good. Aluminium business, EBITDA number, 4,300 crores, better than the 4,000 crores. Copper business, 670 crores, better than the 600 crores that we were working with. So on both those two parameters, the EBITDA number was a beat. Added to that, at the start of the day, we had news that Novelis's debt had gone up mildly. But on a consolidated basis, because the India business is throwing up so much of cash, their net cash as it is, and the net debt number actually has improved on a sequential basis and even on a year-on-year basis. So that's heartening to see because they've been incurring a big capex. Moving to Novelis, that's a bit of a problem pocket. The EBITDA per ton number came out around $432 per ton. The street was working with a number of around $450 per ton. So you'll say that is disappointing. Yes, it is. And in the first quarter, the tariff impact was around $28 million. Now, the management said that since the tariff actually has been fixed at 50% instead of 25%, the impact on a quarterly run rate could be around $60 million. Earlier, they were talking about $40 million. So in quarter two, in all probability, you'll have a negative impact of around $60 million. Now, that as well is negative. But the management is calling out that this is bottoming out of the EBITDA and things will improve from here on. That's because they're going ahead and they're focusing on the cost side and they're looking at saving close to around $100 million by the end of this year. In the coming years, they're talking about a number of around $300 million odd. And earlier, they were talking about $75 million in the near term, which now they've upped to around $100 million. So the street likes it that the management is actually calling out that things will bottom out from here on. The management spoke to me earlier today. They said that the quarter two performance for Novelis will be similar to what we saw in quarter one. But in the second half of the year, they're saying the aspiration is to gradually head towards that $500 on a per ton basis. So that's encouraging to hear. And in terms of brokerages, various brokerages were skittish, but CLSA, they have an outperform rating, target price of around 850 rupees per share. They're expecting the capex to peak out and they're expecting the consolidated leverage will be sub 2 times. So put everything together, global backdrop is good, India business is doing quite well, and they are calling out that the Novelis business will actually bottom out. Street likes it, stock, one of the top gainers on the Nifty.
Okay, let's move on and get